Okay, so we're going to talk about self-custody and being your own bank today. Yay. I know everybody's kind of at a different point in their self-custody level. So I think that makes for a good conversation because everybody's kind of at a different place. You know, there's some chatter on the podcast that the global financial system, we already know, we've been talking about how the global financial system is changing, but it appears it's changing a bit faster than even I thought. And so I think that this is certainly a conversation that we shouldn't delay much longer. So I thought we'd start with a couple of questions because I think this is a difficult conversation even for me because I think there's a lot of like, we're used to certain things and we don't, we're moving from something very known to something unknown, but that doesn't always mean that the known is like the safest option, right? So I actually want you guys to answer these questions. So when you think about your money right now, do you know where it actually sits when it's in the bank?
My money is in other people's bank accounts as loans, right?
That sounds like a good answer. So is that your money or is it the bank's promise to give you the money? I think just the point of this is just to establish that there's a lot of uncertainty. There's a lot of emotions. There's a lot of, I don't really know. And I think that we have lived in a society where it generally was safe enough to trust the banks. But I think that when I look into the future, I'm not sure that that trust necessarily remains the same as it has in the past. And it's more about the uncertainty. It's more about like, I don't actually really know what is going on in the background with the banks. And there are a lot of promises that things will be given back, but there's also been a lot of situations in the recent past where there have been failures of this and it's caused major problems, and it's been to the surprise of the people holding their money there. And it also has other systemic risks, which we'll get into. So is it even necessarily the best system? That's a whole other conversation. But as far as like a question I kind of ask myself even is like, okay, if I don't necessarily trust that the government and the banks have my best interest in mind for my money, then what keeps me participating in that system, keeps me participating in, giving them my money. So I'm giving them my money to trust it, even with my like uncertainty and my feelings of like, I don't know that they really have my best interest in mind. I still keep my money there too, right? So it's like, what is it? Is it the convenience of it? Is it it's what we know? Is there a fear of what else? Or is there a lack of knowledge of what else I could do? Is it just easier? I don't have to do anything. I don't have to make a change. Not making a change is easier than making a change. So those are kind of the questions that came up for me. Brings up a really good point. It's not necessarily the bank's fault, right? That was a small local bank. They, I mean, I don't know. It wasn't like, it's not like Morgan Stanley or like Charles Schwab, like it was a smaller bank, right? They didn't necessarily have any poor intentions. They're just following the rules, but the system is one of rehypothecation. And so they did not have, and it's a debt-based system, right? And so they did not have it just sitting. The point is, it wasn't just sitting in a vault under the bank waiting for them to go get it, right? And biggest point, which I think is really important, is that it's the entire system, the way that it's built is just very fragile. And in a political climate, which we have right now, and a global political climate and a global monetary climate right now, a system that's built on trust is even more fragile. Does that make sense? So it's not necessarily that we can't trust it. But if trust is the only thing holding it together, and trust in these systems and our political systems and our governments, and the governments and the banks are connected, right? So the government prints money and gives it to the banks. So, and when the banks fail, the governments just give them money to bail them out. So they are definitely very interconnected. And so if you are losing trust in the government, or you're losing trust in these systems, that makes the entire system very fragile. And so I think that's what concerns me the most. So some of the risks actually, so we kind of talked about a little bit of that. We talked about the Silicon Valley Bank failure, right? So we have bank failures, we have fraud, asset rehypothecation. So those are custodial risks of the bank. So that means the custodian is whoever is actually holding your money. If that custodian has some sort of bank run or a hack or some fraudulent situation that happens, the bank just fails in some way, then that's called a custodial risk. So because you're trusting the custodian, but they may not be able to keep it together. And there are many examples like the explanation of the SVB, Lehman Brothers in 2008. And these are all situations in which who bails them out? Like the banks are not actually really responsible, because the government either does two things. They either use taxpayer money to pay the banks back, or they print more money to pay the banks back, which now devalues your money. So it's not a situation which you want to happen in any way. It's not good for the country, but it just keeps happening. It happened in 2008. It happened in 2022 when FTX went under, and it took BlockFi with them. And so I have personal experience where I trusted the custodian, which was BlockFi. And BlockFi actually wasn't really doing anything wrong either. They had rehypothecated my assets, but FTX did something bad with it. And so they were not able to pay BlockFi back. And so then BlockFi was not able to pay me back, right? So I felt that risk, and I lost a lot. I lost a lot in that. And so I no longer blindly trust any of these custodians, because I don't know what is going on behind the scenes. If they are rehypothecating, if they are taking my assets and sending them somewhere else, I no longer know who has my assets at all. You don't know who they gave it to. You're trusting that they did their due diligence for who they rehypothecated it to, but you don't have that information. So that makes it pretty tricky. And if there's even just one bad apple, like FTX or Lehman Brothers, right? Like it can have domino effects on all the others, even if you trust where you put your money, if it is not actually in the bank and they rehypothecated it to somebody else who's a bad actor, then you still get screwed over. Okay, so those are custodial risks. So then we have policy risk. This is more about like what's going on with the government, policies that the government has. This is more about, so when you hold money in the bank, or in a retirement account, or you have a pension, right? And you're depending on the pension. So there are all sorts of policies that have been created around this. Like there are certain rules around how much you can hold in certain accounts, what the tax implications of taking money out of certain accounts, like the retirement account rules could literally change any minute now, right? And then you won't really, whatever. So then we also have policy risks like around what rules the government has for banks. Those can also change, right? And then right now we also have a government which appears to be wanting more control over a lot of assets, and they could do something like an emergency temporary measure, where emergency measure could be like a freezing of something. It could be capital controls, which is we now have a policy where you're no longer allowed to move money from this bank account to an external bank account for another country. It could say you're not allowed to move money from one bank to another at all. And you actually would not have any control over that. They could also freeze individual accounts. And this is something that's happened where if the government does not agree with or like something that somebody is saying, they know whose bank account it is, and they can tell the banks to freeze their accounts. And this has happened with a lot of crypto companies in like 2024. A lot of the cryptocurrency companies were debanked, which means their bank accounts were just closed without their notification, or it was just closed, and they were no longer allowed to bank with them. So all of these are risks that you take when you hold your money with the bank. You just don't know what could change. Yeah. And then there's the censorship risks, which is just, I guess I kind of talked on that, which is like if the government, if there's political reasons why they want to block certain people or certain groups from transacting, they can. Okay, there were a couple of philosophical arguments for this. So ownership doesn't equal access. Basically what that means is you might own, say, a share of a company and it's held in your Schwab bank account, but that doesn't actually mean that you have access to it at any point in time. The other argument for it is that decentralization of the money is actually more resilient. So right now, right, we have a very fragile system because all the money is basically held in just a couple of banks, right? There's a laundry list of banks, but it's mostly centralized in the banks. And then people don't actually hold the money, like individual people don't hold it. You have the bank that holds it, it's centralized here. And if this one bank fails, then like a whole bunch of people fail, right? But when you have a decentralized system, so if every person is responsible for their own assets and accessing and managing their own assets, then if one person fails, the entire system doesn't fail, right? And then agency and competence. So essentially knowing how to secure your money then builds your own financial literacy, your confidence. And when you're dependent on the current system for doing everything, you don't gain any competence. You actually lose competence because you're like, I don't really know how it works, and I don't really need to know how it works because I just go to the bank and I have my ATM and I get my money out and that's it. So you don't really know how it works. And it also erodes your agency. You don't have as much agency in your own financial life, right? But when you self-custody, then you're forced to gain the knowledge, the financial literacy, the confidence, and you automatically have more agency. And then there's like the moral argument for it, essentially. By the current system of centralizing money into banks and and having the government control the money and be able to control where the money goes and whose accounts are frozen and whose are accessible. And if they print more money, they can say where it goes. I mean, this is kind of unethical money at that point because they use that to fund wars, bail out banks, and it's not supporting the people who the government is supposed to be protecting. Okay, back to self-custody. So self-custody of your assets versus traditional banking. There's just a quick little chart. Like 100 years ago, we didn't have computers. So it was a very different world. Now we can have decentralized systems because everybody's digital. Everybody can store their money on their phone, on their own, and they can use that to trade and buy and sell goods electronically. I mean, there's not necessarily a reason you need a central bank to be controlling all of the money. You know, the history of banking is interesting, but one of the main reasons is like, so if I had my gold coins back in the day, but I needed to send that money to somebody in a different town to buy something or for a service, or I don't know, even to another country, because I need to send this money to another country so that I can pay for somebody's, you know, boat trip across the Atlantic. Like, people needed to move money across distances, but if they hold their money themselves, they kind of needed to give it to somebody else to take it to the other place, right? Where banks came in and they said, well, if you give us your money, we have people that are going to go to these other cities and then they can like deposit the money over there, right? So now the banks kind of just like hold money all the time so that they can move money around the different places. Well, yeah, you did need it back then because, you know, how else were you going to move money around even your town or state? So unless you wanted to go everywhere to do that. So that the banks had a purpose, but we don't really need that anymore. We can pay for things globally from my phone sitting right here. I don't need an intermediary to help me move money. At current, the money has basically just been digitized. So now you just have digital money that's sitting in banks. But why do we have digital money sitting in banks? Why don't we just have digital money sitting at home? At this point, there's more risk. So if we look kind of at, you know, the government bank reliance risk. So these are the risks, and this is, so the user error risk is high in self-custody, right? Because if you lose your keys, then you fucked up and you lose your money, right? So there's high user error where there's low user error here, right? But with the government and the banks, there's very high risk in counterparty risk, inflation risk, liquidity access, censorship or freeze risk. There's very little transparency, so nobody has any idea what is going on. So there's a lot more risks now to that. And when there's actually more risk now than before, when we had actual paper dollars that people were storing in banks, it was a little bit harder to manipulate it or change it, right? But now they're digitizing it so that most of the money in the banking system is going to be like digitized as tokens. And it's going to be like programmable money, which now the banks can control the money. The governments can control that money. So instead of it kind of helping you, now you're at risk of like, oh, well, they could program those token dollars, which is going to be USDC stablecoin. They could say, oh, we're programming the USDC so that it can only be used on gasoline, or it can only be used on groceries, or it can only be used for healthcare purchases. Like, they could say that. What's to stop them? Because it's digital programmable money that they can make it like that. So there's more, you're giving up a lot of control to have the convenience of somebody else thinking about it for you. Are any of these, like, which one are you guys most concerned about of the risk types?
User error.
User error.
It's interesting because that's basically the only benefit that it gives you. And it's also something that you're basically saying, I trust the banks more than I trust myself. Okay, so what does it mean to be your own bank? Traditional system, the bank holds your money. You only access it with their permission. You have to have your username and password to get in. They're only open during business hours. They can freeze, limit, or confiscate your funds. They can have a bank run and lose them. And you do earn interest on the FDI insured bank deposits. You earn very minimal interest. It's like 0.2% interest. It's not like 4 or 5% interest. So you basically, with inflation, you're still losing money by holding it with them. So that's the traditional bank. That's you having the bank hold your money. In self-custody, you kind of have your own keys to this vault. You've got the vault. You keep the vault, and you have the keys to the vault. You're the only any person who can control the money. And there's no banking hours. You can move money 24 hours a day, 7 days a week, whenever you want, even on holidays, whenever. Nobody will even know where you sent the money, so you don't have to worry about anybody doing surveillance on maybe where you are spending your money. And yes, but you are responsible. So you're responsible when you're the own bank. You are responsible for the security of your funds, for any backups that you have to make, you do have to be responsible. So those are the trade-offs. It's basically, do I not want to be responsible? So I'm going to take on the potential risks of being locked out of my account, my money declining in value, like only being able to get it when it's convenient for them. And basically you're like, I don't know if I trust myself, and there's a lot of risk there. So I think I'm going to trust that like our financial system is going to be secure for a little bit longer. That's kind of the trade-off that we're making. And I mean, I'm not preaching here. I'm telling you that that's how I feel too. I still have my money in a bank, and I have some outside and some in, which I think for me is like a good balance right now. I'm balancing. I have money that I have in my own wallet, my own vault that I'm responsible for. But I also have another source that is the convenience, so I have money that's in a more convenient form. So for me, it kind of split the risk because there's risks in both, right? That's why we're having this presentation. That's why we're even talking about it, because I did not step into self-custody like everything overnight. It helps to try something that you're willing to lose. Try it with something you're willing to lose, and then that's practicing, right? So that's just like learning anything else. Like when you had to learn how to use the iPhone, like we didn't grow up with iPhones. We had to learn how to use them, right? When we first looked at it, we probably were like, what the hell? Like, I don't know how to use this. You have to I don't understand all the different swipey things and whatever. But we practice and we figured it out, right? So, I mean, this is very similar to that. It's new. But, 100 years ago or 200 years ago, everybody self-custodied their money. Everybody was responsible for their own money, right? So by having the banking system that we've had, it actually just has disempowered people financially entirely. And so, and it's taken people's autonomy away from them around this and made them think that I don't know what to do. I don't know anything about my money and I don't trust myself. But a lot of that is, okay, I don't trust myself because I have no education around it and I haven't done it before, right? And so anything new, we have to learn about it and then go practice and do it. So yeah, I think that the purpose of this presentation really is everybody is at a different place, but the point is that you're not going to just gain that confidence by watching the presentation either. You're going to gain the confidence by going out and trying it, and try it with something that you can lose. Kind of like when people are first learning how to trade stocks, they don't say just jump in and start trading with your own money. They say create a paper trading account, which basically means you trade with fake money, kind of like as if it were a game, and you trade with fake money to learn how the system works so that you don't fuck things up. Then once you feel comfortable with the systems, then you can start trading with real money. So this is kind of similar, except you might just try practicing with you could try practicing with like one sat. You could move one sat, which is like less than a penny, which is basically like trading with nothing, with fake money. So you can practice with just such small amounts that you're not stressed about it at all. And then by doing it over and over again, you kind of build that confidence. But there's also some really great tools out there now that help make it a lot easier. And thank you to everybody in the Bitcoin ecosystem who has really helped make it super easy. Okay, so what does living on a Bitcoin standard even mean before we get into the technical stuff? So you want to be your own bank. Being your own bank kind of just means you're managing your own money yourself, but you're basically your own bank, but you still just you're not necessarily spending it, right? It's just sitting there as like a savings account essentially. And basically we're still thinking in like a very fiat world. We're still thinking in like a USD currency or a euro currency, and everything is denominated in US dollars or euros. And we're just thinking, well, the Bitcoin is worth a certain amount of euro or US dollar, right? So what it means to really live on the Bitcoin standard, which one day you probably will, but we're just introducing the idea right now. Nobody is doing that right now. But it's really structuring your entire finances and your life around Bitcoin as both a store of value. Right now, everybody has Bitcoin as a store of value. But it would also be a unit of account. So it's, instead of just measuring the cost of this iPhone in dollars, like, oh, instead of it being a $500 phone, it might be like a 0.005 Bitcoin phone, right? That's what I mean by unit of account. And it is very similar to when we operated on that gold standard pre-1971. We did operate that way, where you had gold as the store of value, and things were actually denominated in gold because gold was 1-to-1 to a US dollar. So the US dollar was pegged to the price of gold. It wasn't that the US dollar was $1. So back then it was the gold standard, right? So everything was denominated in the value of gold. But the Bitcoin standard is everything is denominated in Bitcoin. So to do this, you basically have the majority of your net worth sitting in Bitcoin, primarily, hopefully in self-custody in some sort of cold storage. And you basically treat that as your savings account, so that your money doesn't get debased and it can't be taken away from you, right? Then you start measuring things in Bitcoin. There's actually some really interesting, there's like a Google Chrome extension that when you're like shopping on the internet, it'll tell, and it says like the price of something, it'll actually tell you the price in Bitcoin, not the price in US dollar. So that you start getting your brain to start thinking about how much that costs in Bitcoin rather than how much it costs in dollars or euros. And that's a little bit trickier now just because the price is so volatile. And so the price in Bitcoin does kind of like keep changing. But also as that starts to level out and as volatility drops, then that's much more stable. And it is a lot more stable than it was. I know it still seems really volatile, but it's actually a lot less volatile than medium of exchange. So when you're on a Bitcoin standard, you're actually buying and selling in Bitcoin. So you could accept payment in Bitcoin. You could start saying, instead of paying me in US dollars, pay me in Bitcoin, and here's my Bitcoin address. And you can shop at places that accept Bitcoin. I actually just found the Orange Pill app that I found, which has been it's really cool app actually. It's very like social Bitcoin app. But I found a guy in Raleigh who runs an ice cream store right like a couple blocks from me, and he accepts Bitcoin. There's a whole other issue with, the trusting of the government to sustain you through the social programs. I mean, through Social Security and Medicare and everything that they're paying for, they are paying for it in US dollars, and they are giving you a cost of living increase, but they're giving you they're giving you a cost of living increase for what they deem inflation is, not for the debasing of the currency. So they might raise your Social Security payments by like 3% per year, but if it's being debased at like 8% per year, you're still losing. So there are issues with that moving forward about being entirely reliant on that in the future.
Yeah.
So to live on the Bitcoin standard, there's just I'm just trying to get your head around what this actually would look like. So you'd be accepting it and you would be buying it. But right now, right? So most people don't accept Bitcoin for payment. So you still have to pay them in US dollars, and you're still getting income in US dollars because a lot of your income sources will not be coming in as Bitcoin, like your Social Security payments, your pension checks, those are still going to be in US dollars. So you're still receiving US dollars and you still have to pay with US dollars. But a Bitcoin standard would be trying to buy and sell with Bitcoin as much as possible, as much as you can. Yeah, and then the fourth thing is just the psychological shift around it. It's the whole self-custody mindset where you're no longer in this trust-based system that's extremely fragile. You're in a self-responsible system, and one that is secured by the technology, the math, and the physics, and all of that. So you don't necessarily have to trust in it because you know that it works. Really, you just have to trust in yourself. And what was I going to say about that? Well, that by doing that, it can relieve a lot of anxiety because you're no longer at all worrying about inflation. You're not worrying about inflation. You're not worried about what the banks are doing. You could really care less. You don't really care what the government policies change as far as social programs, because you're like, I've got myself, I'm okay. So there's a lot less to be anxious about there. You're only anxious about your keys. But like, once you figure that out, and once you have enough backups and security, like even that you won't worry about, you know? So it's a psychological shift that it takes. Okay, so how do you actually be your own bank? How do you self-custody? I personally did not feel comfortable doing entirely solo self-custody. So I looked into multi-sig, and I looked at a bunch, and this is the one that I decided on that I thought was the best, I guess. The reason I chose Casa, and the reason I chose multi-sig custody is because I am not the single point of failure in this. So if I lose my one key, then there are others. And that gave me a lot of confidence. So yeah, so for $250 a year, you have the peace of mind that you have 3 keys, and you need 2 out of the 3 keys in order to move the money. So you're not as worried about theft or people hacking or losing one of your keys, because they're not all going to be in the same place. And they also handle inheritance. So you don't have to worry about, like, if you die, where does it go? They also handle that. And also they were just like really nice people. I had so they send you, if you do so that's the standard. And then if you do the premium, which they recommend for people with like more than 1 Bitcoin, I guess, it's more, it's 2,000 a year, but then you have a 5-key vault, which means you need 3 out of the 5 keys, but that also means that you can lose 2 of your keys and still get access to your money. My example earlier of, like, you know, me having a key or mom having a key, that's kind of just an example, but it's not necessarily like that. So the 5-key vault could be like, one of the keys is electronic on your phone, and so your phone wallet is a key. The second key is actually a key that you keep at home, like a physical one with your, backup keywords. The third key could be you actually store it in a bank vault. The fourth key is actually held by Casa itself. So this company holds a key. And then the 5th key could be somewhere entirely different that protects against, like, geopolitical and risks that are a bit more, that are less likely, but also important. So like protecting against like a flood or fires. So like, for example, when the LA wildfires happened, there were Bitcoiners who had their keys there. But if they had stored a key outside of that region, they would still have access. So the point is to store at least 1 key that's like more than 200 miles away from where you are, so that it's protected against natural disasters, essentially. I am trusting Casa to help me out if I lose one of my keys. But if they go out of business, I also have a way to access that key if they go out of business. So I'm not really trusting them. And they only have one key. So they have absolutely no access to my Bitcoin because you need at least 3 of the keys and they only have 1. So if you have 5 keys, what are the chances that you lose 3 of them all at the same time? Yeah, you still have cold storage. So with the with this level, so with their standard level, they don't send you any of the devices and it's only 3 keys and you need 2 out of the 3 keys, which I think is fine if you don't have that, like if it's not that much money, that's probably fine. But I did not feel comfortable with that. So with the premium version, you do pay more, but they send you a box with everything that you need. So you don't have to buy it yourself. They send you all of the hardware devices, these like Faraday bags. Where do they say? Oh, here's the list of the keys that they recommend. All right, they didn't say, but they have like these Faraday bags, which are like these bags where you actually put the key in so they can't be like messed with radioactively or anything.
RFID.
Yeah, that
Yeah.
kind of thing. So then they're also protected that way. So they give you all of those and then they set up a call with you where they do a video call and they walk you step by step, setting up every device, doing all of your passwords, making sure that you understand everything that you're doing. And they have email support. So then they also set up the inheritance stuff with you over the phone too. I was on this call with this woman for like maybe an hour and a half. She was the most patient person. I was like, man, you must be so bored. She's like, I love this job. I just love getting people set up. It's so great. She was really sweet. And we ran out of time. And she was just like, I'll just set up another call with you for tomorrow and we'll finish it, you know? So she just was so patient and she was like, I will spend as much time as you need to feel comfortable with this. And whenever I needed to email her, she emailed me back. And they also set me up with like they even set you up with like if you're under duress, you can call them. You can like 911 call from your phone, you can call them and it will, or you can like in the app, you can actually say like, I think there might've been a breach and I want to lock my account, and it will automatically they automatically freeze your funds for 24 hours until you contact them so that nothing can get moved. And then she said and then they also set it up so that so if somebody broke into my house and tried to steal my Bitcoin, well, I would only have 2 keys here and they would need a third. So I would have to say, oh, well, Casa has my 3rd key. So I have to call them and they'd be like, okay, call them. And I'd be on the video call to get my key from Casa. And, the guy who's maybe I'm at gunpoint, and this is kind of morbid, but okay, so if I'm at gunpoint and they're like, get the key and don't make trouble, so I would have to say something to Casa that the invader wouldn't know was a thing, right? And so Casa said, just give us a code word that you're going to use if you try to access your funds and you're under duress and you don't want us to. And so I gave them a word, and she's like, just blend that word into conversation. And she had me practice it, very thorough. She's like, we're going to practice role play. You're under duress. And what are you going to say? And what are you going to do? And then what else did she do? Then she said, and we will note it and we will immediately freeze your account, but we will continue to go forth and pretend as if we are releasing funds so that you're safe and the invader doesn't think that anything is up. And then as soon as we get off the phone, we call your emergency contact. You can list an emergency contact that you want them to call to say, to alert the authorities, and they'll call the authorities for you, blah, blah, blah. There's a difference between a wallet and a vault. So if it's in a vault, it means you need 2 to 3 keys to even move that money somewhere. So it's like you need the key to the vault, right? If it's on your phone, on the wallet on your phone, you only need the key that's on your phone to move the funds. So basically, if it's on your phone, you can just move it. You only need 1 key if it's in the wallet. You need 2 to 3 keys if it's in the vault. So the app doesn't necessarily hide it, but it makes it clear that there's no money in the wallet. There's only money in the vault, and the vault requires 3 keys. And that's going to deter a lot of invaders. If you're like, it's a 3-key vault, you're going to need 3 keys, and I don't have the other one here. And they're going to be like, well, I don't want to wait around for somebody to call 911, and like, I'm not going to chase you all over town to like go get the other key. So they would likely give up. It's just, yeah. And also about the whole, like, people, stalking you because they know you have Bitcoin. Like, the more people that have Bitcoin, the less of a target you will have on your back, because a lot of people have it. And a lot of people are even out there, like, on social media and Twitter saying, like, I've got 20 Bitcoin. This is how I made this much money, blah, 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 So that's up to them. I'm not going to do that. But there are people out there that are very open about how much they have, or they're just very open. They're very, they're high profile. Like, it's just known in the industry that they got in early, and it's very public that they got in early. So you can make assumptions, It's a very low percentage risk, but I feel like now that I have these 5 keys, I have all these protections, I've got this company, and I have an actual person I know at a company who, if I have any questions, I can ask her. Like, I feel very supported. I feel like Casa's not my bank, but they are helping me be my own bank. Obviously, you do your own research on what self-custody you like. A lot of people do just hold it themselves with the code themselves, and it's at home, their seed phrase or whatever, and they're comfortable with that. That's basically just like storing gold under your mattress. For where I was at, I didn't feel comfortable just storing all my gold under the mattress. I really wanted to make sure that it was more secure than that. And so I did my research. I found that this one worked, and it gave me a lot of peace of mind. And so I just wanted to share that with you. Oh, also, fun fact bonus, the founder of Casa is from Raleigh.
Whoa. In the fam.
Yeah, he's from Raleigh. And he started this company because he had a serious, he needed security, and he didn't have the security that he needed at the time. So he created it. But he's from Raleigh. The other cool thing is that with this level, you can also share it. So you could share with your husband the account, and you can also set up inheritance, so that in your case of your passing, it gets passed on to the person that you say it should be left to. That's pretty much it for Casa. Okay, so that's self-custody of your savings. So I kind of broke it up into this way of, like, if you are your own bank, like, where do you put your savings? Where is your checking? And then where are your retirement accounts? So how do you even self-custody your IRAs or your Roth IRAs? This is also something I haven't done, but I'm looking into. But there are companies like Bitcoin IRA and Unchained IRA where these are not banks, but they they allow you to move your retirement accounts to either this Bitcoin IRA company or to the Unchained one, which I can pull up. I have talked to the people at Unchained, and they are pretty respectable in the industry. But yeah, you can move your IRAs over and they will allow you to buy spot Bitcoin in your IRA, and they don't hold it. So they still are not the bank. They do the multi-sig situation where Unchained holds one key and you hold one key, and then I think there's another key, and you need then you fund it with the rollover from your existing IRA. Or sorry, you fund it with a rollover, like if you wanted to roll over your 401k into an IRA, you could do that. Or you can do an in-kind transfer, which is moving your existing IRA holdings over to here. Then they help set it up. They help you sell whatever it is and then buy the Bitcoin. And that's that. How exactly do they custody it? That is a good question.
As we kick off the first in a recurring discussion titled Introduction to Bitcoin IRA.
Connor's going to talk a little bit about how you can secure your Unchained IRA funds with multi-sig while still having control over a quorum of keys.
Yeah, absolutely. Thank you for that overview, Jeff. And once again, thanks everyone for being here. Before we jump into the Unchained IRA specifically, I do want to just take a moment to discuss Unchained Capital and our platform more broadly. And so without getting too deep into the technical weeds here, I did just want to walk through the backbone behind.
So I guess they have the, oh, no, that's
Bitcoin, which is public private key cryptography. There's a little diagram of these. There's a visual on the screen here. You can also think about it as a digital safety deposit box.
There we go. So you need two of the three. So you have, I guess you have one key with them and then two somewhere else. I'm not exactly sure. So that's one of them. So Unchained is one. So that's an option. You can move that there. You still hold the keys. Again, it's essentially self-custody of your retirement accounts. So then we have self-custody of checking accounts, essentially. So I'm saying checking account, even though, it's not really a checking account. But the point is you have self-custody of your Bitcoin, right? But you need something to bridge that with like our current system now, right? Because we have a current economic system and we've got the Bitcoin system. So how do you like interchange? So it bridges that a little bit. So the checking accounts really are not self-custody at all. The checking account would be a custodied account. So you would be holding Bitcoin though in custody with another company. So there are a couple of them. One we just found out about this morning. So the first two is Strike and Fold are two companies in the US that basically allow you to, they act as Bitcoin banks. You can deposit cash and automatically convert it to Bitcoin. You can have direct deposit. So with your employer, if your employer pays you, you can have it directly deposited to one of these accounts. And you can select, I want it all converted to Bitcoin, or I want 50% of my paycheck to be in Bitcoin, 20%, whatever. So you can select how much, and whenever that paycheck comes in, it automatically gets converted to Bitcoin. And then the same happens for expenses. So you can do bill pay through these apps as well. So you can pay your rent, you can pay off your credit card, you can pay whatever you need to pay off through these. So you can set it up so that like your credit card company automatically withdraws from the Strike or the Fold account every month when you need to do that. And when it pays that off, Strike or Fold automatically just sells the Bitcoin, converts it to US dollar, and pays your bill. So essentially, you don't see anything happen at all. It all happens automatically. The only things that you'll see are, you are buying and selling Bitcoin. So there are the tax implications, but they track all the taxes for you and they give you something at the end of the year. And there are, depending on which one, they might have a fee for every transaction or a spread between the prices. So they do make some money off of this, obviously, but it is pretty reasonable, like considering the service. They're pretty low fees. And then there's another one, Bring In. Is it Bring In? Bring In, I guess. So this is a new one for Europe. So it works in Europe, same thing. You can have your money deposited in here and you can pay bills in euro from here, and it connects to your other euro bank accounts. It gives you an IBAN, your own personal IBAN. And they've been, when I looked into this, and they were beta testing this for like a year, I guess. I don't know how many millions or billions of dollars went through the app already. And so now they're releasing it to the public. Oh, they also have a Visa debit card. So the one in Europe, this Bring In one, you can get a Visa card. So when you're out and about, you can even use your Visa card to pay for things. And every time it'll sell your Bitcoin and convert it to dollars and pay for it, or euros. For this, it'll convert it to euros. So that's pretty easy. The one that I use, with the caveat that I'm trying to spend my US dollars before I spend my Bitcoin, so I'm not actually paying any bills with this yet either. But this is I really like this app, and I like the founder. He's just, I don't want to say he's an average guy, but Jack Mallers is the founder of Strike. He's very passionate, very, very passionate. But he is the prime example. He lives on a Bitcoin standard. So he doesn't have any US dollars. He lives only in Bitcoin, and he uses his app to live. You can pay bills, you can get paid. Let's see. They organize your taxes. You can shop. Bitcoin settles here. It's the ledger of which all these transactions settle on the on the blockchain. It takes time for that to get confirmed on the blockchain, so it might take 10 minutes for each one to get confirmed. So you need another layer that's faster and can settle within seconds or minutes, not 10 minutes. So basically when you're bill paying or you're paying for things, right? It's basically the way that they've set this up is that there's lots of people buying and selling, right? So they settle it on the Lightning Network first. So they are like, okay, we'll settle it on the Lightning Network. That's faster to settle all of these charges. And then they group them together. They group these transactions together to then to do the final settlement layer on the blockchain, on the Bitcoin blockchain. So back to checking accounts. So Strike also offers Bitcoin backed loans. So that's another positive. They will lend you 50% of the value of your Bitcoin at 9.5%. And you can pay no monthly payments. You pay it back in 1 year. Minimum $10,000. But yeah, so you have to have at least $20,000 in Bitcoin to borrow. So you could do the Bitcoin backed lending with them. So they're sort of still acting as a bank, right? The way that I was thinking about these as like a checking account sort of thing is right. So you go to the ATM and you get like $200 cash out of your bank and you put the money in your wallet, like literally your wallet, and you walk around the street with this money in your wallet. So yeah, you can move money from your cold storage into these custodied wallets so that you can spend it, just as if you were getting money out of an ATM. Okay, so you might want to look into Firefish because this is actually peer-to-peer lending. So you put up your Bitcoin against, and a peer actually lends you the money against it, not a bank. And you do lock the Bitcoin collateral, but I believe it's not, I just watched something about this and I thought that it was multi-sig. So I think it's not, let's find out how it's custodied. It's non-custodial. So you have an on-chain multi-sig contract. So you do transfer the Bitcoin to another place, but you hold a key, Firefish holds a key, and the person that you're lending from holds a key. And you need 2 keys to get it. So no one person can take it. Even if Firefish were hacked, they would get the Firefish key, but they wouldn't get your key and they wouldn't get the lender's key. If you educate yourself enough on Bitcoin, you really truly understand how it works, like on the back end with the blockchain and sort of more technically speaking, then I think that that's where you personally will find your confidence, because you'll be able to understand how it works. And so when you check out this website or that product, you'll be able to see like, oh, well, this is a scam or something because that's not how the blockchain works or something, right? So I think for you, based on like, not everybody needs this level of understanding. A lot of people people use US dollars and they don't know how it works. People use the banking system and they don't have a clue how it works, but they use it and they trust it, right? So there is risk everywhere, but educating yourself more on how Bitcoin works, you'll be able to evaluate whether or not these companies are for real or not, and whether they're safe or not. Because I understand mostly how it works. Like, I don't understand all of the intricacies of it either. But I understand how multi-sig custody works. And so that's why this feels safe to me. But every step of the way, definitely ask, like, is this step safe? Is this step safe? And then after you've done it a million times, you'll be like, oh yeah, of course this is safe. There are ways to access the Bitcoin or use it. And I just found out about Firefish, I guess, recently-ish. So we were talking about Strike, and we were talking about how Strike as a sort of checking account allows lending, but if you put any of your Bitcoin on Strike, Strike is holding it and you don't have the keys. Now, to some people, that again is a benefit because now you are not responsible for the key. Now, Strike is responsible for the key. So there you are putting the trust in Strike instead of yourself. But if you want to lend but hold on to your keys, then there are other lending platforms that allow you to hold your own keys while getting a loan. Yes. So since this is a self-custody conversation, that's why we brought up Firefish, because you can get a loan against your Bitcoin while undoing self-custody. And then the other one that I'll mention and introduce is Fold, because this one is also going to be important for other reasons. Fold is coming. So Fold already has a debit card as well, and you earn rewards back for using your Fold card. It's kind of a complicated website, so I won't go into it all that much. But so Fold pretty much acts similar to Strike, but they are integrating with a credit card soon as well. That's I'll get into the credit card later. But Fold has a debit card. You can deposit your paychecks here. You can do bill pay from here. Same thing. Fold, I mean, these are fairly established companies. Fold is listed is listed on the NASDAQ or something, I think. Strike is not a public company, but Jack Mallers owns lots of public companies. Strike was kind of the first to get there. Yeah, and Fold kind of does the same thing. You also earn points. You earn back sats, not Bitcoin, but small portions of Bitcoin for all of your charges to your Visa debit card. You can get money from ATMs. Now, this is a US one, so I'm not exactly sure how, like, I'm not sure if it works in Europe or not. I didn't look into that one. I'm not sure. But yes, Fold is definitely an option for that. But also where did it go? Here it is. So also this one could also replace your Bank of America because you're in Europe, I'm guessing. So I'm not exactly sure if you had US dollars deposited into this account, what the exchange rate would be, but that might be something to look into. If you got a paycheck deposited here, it would automatically convert it to Bitcoin. And then when you needed to pay for things, you would pay for them in euro and it would convert the Bitcoin to euro. It's not going to convert the Bitcoin to US dollar to euro. Great. So that's self-custody of savings, retirement, and checking. And then I wanted to touch just briefly on the credit cards coming out, because this is a way to basically spend US dollars, or in your case, spend euro, and get Bitcoin rewards back. So every time you spend US dollars, you get a percentage back in Bitcoin. And then you can pay off that credit card either with dollars if you still have dollars, or with Bitcoin if you are on the Bitcoin standard. Gemini was the first credit card to come out. It's on the MasterCard network. I never got it because it just wasn't really that great, to be honest. You got like 1% back on most things, but like 2% on groceries, 3% on dining, and 4% on gas, like, which I don't use. So not exactly this, but this was the first card that came out. So yay. So Coinbase One just came out with a new card a couple months ago, recently. It's on the American Express network. So that also limits you so that you can really only use this card where American Express is accepted, which is not everywhere. So that is also limiting. They do offer up to 4% on every purchase back in Bitcoin, but only if you hold over $200,000 in Coinbase. So if you hold like $10,000 in Coinbase, then they'll give you 3% back on every purchase in Bitcoin, which is pretty good. It's better than the Gemini one, right? Which only gets you basically like 1% back on most things. So I do have the Coinbase one, American Express. I just got it recently just to test it out and see how it works. And it works like a charm. Literally, I'll be at the grocery store, and as soon as I swipe it, I get a little notification on my phone that says, you just bought $2 of Bitcoin. Like, it's every time I swipe it, it's like rounding up at the cashier, except you're getting it in Bitcoin, and which then goes up like 100% in value. Makes the points much more valuable. So when I ran that against other credit cards that are giving me like even like 6% back on groceries, but that's in US dollars, that doesn't go up, and it takes me 6 months to convert it, like it's sitting still. So yeah, so this still was worth it in the long run to use that. But there's an even better option coming out. Fold, which I just introduced you guys to, is partnered with Visa to come out with a Fold Visa credit card that gets you, well, I don't know, 3.5 or 4% on every purchase. You don't have to hold money with them. So I didn't like that Coinbase, you have to custody Bitcoin with them. But with Fold, you don't have to custody anything with them. And they'll give you 3.5 to 4%. I thought it was 4, but this is saying 3.5. So I'm not sure what that is. For every purchase, which will automatically help you buy Bitcoin. It says unlimited 2% back with potential for 3.5%, because it's 2% back and then 3.5% if you, something about like if you have an account with them and you do direct deposit or something like that. Or not direct, maybe bill pay, or if you have bill pay set up. I forget what it was. Maybe it's on their website. No, it is 3.5%. Okay, it is 3.5. So you would have to hold $200,000 or more in Coinbase in order to get a better return than 3.5%. So yeah, I think that's pretty good. I mean, I get like 6% cash back on my groceries. I get, another, different, maybe 2% back with my other credit cards right now. So 3.5% is pretty good. Yeah. And then additionally, they have all these partners. So then you could actually get 10% back when you shop at certain places like Target. But anyways, so those are the 3 cards. Anyone interested in any of these cards? So I've kind of been doing this. I'll tell you how I've been, because I have multiple credit cards at this point, as I'm sure most of us do. But so then it's like, okay, which one do I use for what? But I mostly I do have an American Express that gets me 6% back just on groceries, and I've only been using it for groceries, which isn't that much. I don't know, but I'm pretty sure. So like on Strike, you can hold Bitcoin and US dollars. You can hold both. So I'm guessing you can hold Bitcoin and US dollars on Fold as well. So you can either pay for things with cash or with Bitcoin, but you will get Bitcoin back in rewards. I can't be an expert in all of this. These products change daily. So there could be a new thing that comes out tomorrow. Who knows? But yeah, ACH bill pay, you get rewards. No fees on direct Bitcoin purchases within the Fold app with the paid member thing. Sell Bitcoin instantly. Dollar cost average, no fee. direct deposit Bitcoin conversions, no fee. So you could automatically convert your paycheck to Bitcoin. Round up spare change into Bitcoin. Yeah. And then the member, I guess you also get more points back. That was it. I had a slide at the end that was just about why run a node and how to run a node. It's literally just one slide. Since it kind of when you've been asking about it, it doesn't really deserve an entire presentation on its own. And I don't know that much about it. It is very technical. So really you just need to go read. There's some blogs like how to run a node, and there's some YouTube tutorials about how to run a node. So I will answer two things. One, what is a node? So a node basically is, the reason you would want to do this is if you want to participate in making the Bitcoin network more decentralized and stronger and more secure. So every node basically means that the system that is broadcasting transactions is more decentralized. And we want it decentralized and we want it secure. The more nodes, the more secure the entire network is. So it's basically like you, as your individual soul, is actually contributing something to the entire financial system for everyone. You're being a team player. You're not going to make any money by running a node. So let's get that clear. It will actually cost money to run a node. And it will take data from your Wi-Fi. So you have to have not even Wi-Fi, internet. You have to hook it up to an Ethernet because I guess it won't work over Wi-Fi because there's too much data over Wi-Fi. So you have to have Ethernet. You have to have a fast, unlimited internet connection. And it requires a computer of some sort, which doesn't mean like a computer like the one you're sitting in front of right now, but something with storage and RAM, essentially. So there's three options. You can either use an old computer, like one that you have lying around from 10 years ago that still has some storage left on it. You can use that. Two, you can use like a Raspberry Pi, which is going to be a much more technical, but also low cost option. It's like basically looks like this picture. It's like little computer parts and it's like tiny, you know, and you just hook Ethernet into it and it like, it's a self-sustaining computer or whatever. But you don't have a monitor or a keyboard. You're not interacting with it. It's just storing data. So basically what you're doing is you're storing the entire Bitcoin transaction history on it. Capiche? So there's really only 3 steps. Oh, there's a third option for hardware, but I'll show you that in a second. There's like the plug and play easy option, which actually looks really cool. But so you just have to get the hardware, the computer, the Raspberry Pi, or the other storage container thing. And then you go to bitcoin.org and you install the Bitcoin Core software. It gets downloaded onto the device. It's a very big thing. So it takes a couple of days, depending on 1 to 7 days, depending on your internet speed. Then after a week, once it's finished installing, it's basically just self-maintains and it runs as long as your internet stays up. It just continues to run. And it sustained itself. And the only thing you have to do is occasionally update the software. But it does take a little bit of energy, but nothing like the mining equipment. It's not like that much energy. Maybe like $5 a month. I don't know. Depends on how much energy costs where you are. The easiest option, if you want to participate, but you don't want to have to set up some weird computer technical thing, and you don't want a project, and you don't have an old computer to use. Zoe, please stop. There's a new device that came out called the Umbrel. It is $400, but you literally just plug it into the wall, download the software, and that's pretty much it. So it's pretty easy. So the Umbrel is more than just running a Bitcoin node. It's basically putting the entire cloud in your house. So you don't have to have Google Drive or iCloud or whatever. You have your own cloud. It also blocks ads on the entire network. So anything using it is ad-free. You can download the AI models to the device and run it all locally. That was also intriguing. So it does that, and you can run the Bitcoin node, and you can store all of your files on it, et cetera, et cetera. So definitely worth looking into if that is also something that you are interested in as far as